Hi everyone, this is Shruti Jadhav from Quadrant Knowledge Solutions. I track the financial crime and compliance and integrated risk management market at QKS. As part of our research, we regularly speak to various technology vendors and end users for various studies that fall under these research areas such as AML, KYC, trade surveillance, GRC, ITRM, VRM, risk-based assessment and so on. And today I would be talking about transaction monitoring. It's a very broad topic but a very crucial aspect of any financial crime and compliance system. So let me quickly take you through the agenda. So as we know that transaction monitoring is a key component of any financial crime and compliance framework and is also an integral function of any AML procedure. But today I will specifically focus on challenges of transaction monitoring, the benefits of optimizing transaction monitoring systems, as well as the challenges in alert management. We'll also touch upon the innovations that we come across in transaction monitoring, like adoption of ML models and so on. So moving forward, let me now focus on the challenges of transaction monitoring. So as you can see, we've listed down some of the very specific challenges here related to transaction monitoring that are seen across various FIs. And we know that since the onset of pandemic, there has been a huge surge in a lot of customer transactions, since customers are moving to digital payment modes and channels, and therefore it's becoming very challenging for the FIs to handle such huge volumes of transactions. FIs with a traditional transaction monitoring framework, which are typically based on rule-based models, often face a challenge of huge volume of alerts, and these alerts further require a lot of manual intervention. Again, a poor quality data is one crucial element here, and that really hampers the efficiency of transaction monitoring, as it increases the volume of the false positives and also the alert backlog, and this further again leads to poor investigations. So when FIs fail to meet regulatory requirements, they usually pose a huge financial risk, strategic risk, as well as reputational risk. So there are a lot of complexities also across the regulatory requirement, and it's very important for the FIs to be up to date in terms of various regulations that they need to follow, or any organization specific regulations they need to follow. So the result, as we know, of the more complex regulatory landscape is what we see is the rise of the RegTech industry. So to conclude this slide, I would like to say that FIs need to be prepared with sophisticated tools to come up with the rate at which the crime patterns are changing, and it's very important for FIs to update their rules regularly to avoid poor transaction monitoring. Moving on to the next slide. Previously, we have just highlighted some of the challenges that are involved in transaction monitoring, where financial institutions are, using a traditional transaction monitoring framework, which is rules-based. But also, now let's talk about how an effective transaction monitoring framework can help institutions, spot and prevent any illegal activities and transactions such as money laundering, terrorist financing, fraud, drug trafficking, identity theft, and so on. Also, as we know that FIs, as per the Bank Secrecy Act, FIs should support regulators by detecting and preventing money laundering and terrorist financing. So it's therefore very important for the transaction monitoring system, or the AML software that the financial institute is using, to generate automatic SAR, that is suspicious activity reports, and currency transaction reports in case of any particular trigger. Again, money launderers, as we know, they are, trying to use sophisticated techniques and also trying to, follow structured transactions and specific amounts to bypass the regulatory threshold and hide the criminal strategies. So, as to sum it up, an effective transaction system helps FIs to understand the customer transaction patterns, also helps FIs to stay compliant in a very highly regulated environment. Let's move on to the next slide and see some of the challenges that are involved in alert management. So alert management, as we know, is a very key aspect of transaction monitoring. A proper alert handling drives efficient transaction monitoring. But poor quality data, unproductive alerts, all of these, very difficult for the FIs to manage, and also FIs have to invest a lot into resources and teams to create the manual alert review process. The rule-based generated alerts also pose a lot of limitations and fail to improve the efficiency of the transaction monitoring system, which often depend on static data and fixed scenarios. Also, sometimes there's an absence of feedback loop for transaction, which does not allow information generated during the investigation process to get into the transaction monitoring system. Again, with a traditional transaction monitoring system, there is lack of scalability because that's the place, or that's a challenge where the FIs have to handle a large volume of transactions, and often these traditional transaction monitoring systems fail to do so. So this is also looked at as one of the major challenges. Besides this, complexities of managing operations to reduce costs and improve compliance with global transaction lists and regulatory compliance, as well as lack of alert management and workflow management tools, are some of the major challenges that are typically involved in alert management. Moving on to the next slide. So why do we need to optimize a transaction monitoring? So here in this slide I've tried to just focus on some of the key elements that drive transaction monitoring optimization. We already know that transaction monitoring helps FIs to reduce false positive alerts and costs related to manual review. But optimizing transaction monitoring drives optimal client segmentation. It helps FIs to adopt risk-based approach by leveraging dynamic data-driven insights to segment customers as well as parameters on basis of the behavioral patterns. It drives intelligent RBA approach by categorizing and prioritizing alerts. It also delivers intelligence to the investigation process of high-risk alerts. So overall, it's very important for financial institutions to optimize their transaction monitoring system by using dynamic rules and scenarios, real-time dynamic data, also alert management and prioritization, and use of advanced technologies is also further driving the process of optimizing transaction monitoring systems. We also see that utilizing various tools and technologies help FIs to build an effective transaction monitoring systems. Advanced technologies such as AI, ML, RPA can help FIs to improvise their existing transaction monitoring systems as well as processes. So let's move on to the next slide and look at some of the innovations through adoption of the AML models. So combining rule-based and ML models for transaction monitoring to reduce false positive is already being implemented by a lot of financial institutes. But FIs typically face a challenge in explaining the regulators about why an alert has been generated within a black box ML-based model. Also why a particular transaction was blocked. So such challenges, where if FIs are unable to explain to the regulators about a particular transaction, here is where the explainable AI is helping FIs to understand the specific reasons behind decision or any output that has been generated due to a particular alert or trigger. It allows FIs to properly investigate cases, file SAR reports, and also respond to supervisor through appropriate narratives and meet the regulatory requirements. Now again, coming back to the black box challenge. So and also that I've also mentioned, we have just made a mention about explainable AI. So two major components of ML is supervised and unsupervised ML models that is also helping FIs combat the challenge of black box, and that is, it's supervised ML is helping FIs reduce false positives based on SARs and investigate further, or rather do investigations that have already been done. Unsupervised ML models are helping FIs to detect unseen patterns or fraud that has not been discovered by any investigator during the transaction monitoring process. So essentially, continuous monitoring and updating machine learning models is essential to adapt the emerging fraud patterns and the evolving threat landscape. Reduce again with this reduction of false negatives, manual investigations, discover hidden relationships between entities, perform risk assessment, prioritize and improve speed and accuracy of the fraud detection is also being led by these emerging or other advanced technologies, and ML is one of the key drivers in this particular space of transaction monitoring. So now let's go to the next slide and look at some of the most interesting and effective tools, that is the knowledge graph that is being implemented by various financial institutes and also adopted by a lot of transaction monitoring vendors to help drive efficient transaction monitoring. So as we know, due to rapid evolution of fraudulent behavior, AML models require greater sophistication to remain effective. And with the growing need to combat sophisticated fraud attacks, knowledge graphs have emerged as an important tool for AML and transaction monitoring. As money laundering involves cash flow relationship between entities, a knowledge graph can be used to capture such financial transactions. So graph analytics is widely used in two forms, that is that's clustering and label propagation. So these are two techniques which are being widely used. But I would not get into the technical details, but rather focus on the benefits that it offers to the FIs. So clustering can be used to focus on investigations or other focus in investigations on certain high risk sectors, while simultaneously reduce the focus on low risk sectors. So the focus always remains on the high risk sectors, and investigators can further derive to conclusions on such accounts, while label propagation helps FIs find previously unknowable patterns that may have been missed by analysts in a transaction monitoring process. So graphs help FIs identify structural patterns and provide a holistic view of customer behavior, and also help FIs combat the problem of sparse data. Moving on to the next slide. So here I'm going to show how the advanced technologies including AI, ML, RPA are making transaction systems prepared for various challenges and helping FIs to optimize transaction monitoring. So we've already covered the AI and ML part on our previous slides, but here let me talk a bit about advanced analytics. And as we know, advanced analytics is an emerging technology in the fraud and risk management space, along with intelligent automation as well as machine learning. So advanced analytics, as we know, detects anomalous transactions. Also, it's helping FIs in the sanction screening process. It is optimizing the AML process, and it is playing a crucial role in reducing the number of false positives as well as reduce the cost and optimize resources when compared to traditional AML methods and systems. And therefore, we see that AML, KYC, CDD, and transaction monitoring vendors are increasingly using advanced analytics techniques like predictive analytics, big data analytics, social network analytics, user behavior analytics, and so on to overcome the challenges in fraud management domain and maximize their solutions overall efficiency as well as effectiveness. So let's move on to the next slide. So here, I'm just going to give my closing thoughts and some comments based on what we've covered till now. So definitely FIs need to employ an appropriate transaction monitoring approach by considering various factors, including the quality of data, which is very important. The company also, they should consider the company specific use cases. Again, they should also consider the readiness for adoption of new technology, costs, and vendor expertise, because we already know lack of data also sometimes makes implementation and adoption of AI a little difficult. So the FI should closely look at these parameters while implementing a transaction monitoring system or rather improving their transaction monitoring system. And they also need to re-evaluate the performance of their alerts and check if there is any requirement to fine-tune the thresholds or check different scenarios. It's also important for FIs to address the risks involved in black box challenge by ensuring explainability of ML models, which is very, very important, and also focus on the explainable outcomes or to eliminate any risks. Also, one important aspect is the adoption of AutoML. So a robust AutoML helps organizations boost the efficiency in building a robust, scalable, and accurate machine learning model. This can significantly boost the productivity of case investigation and resolution process. We've already covered how AI, ML, and RP are helping FIs to improve the automation of alerts, reduce the number of alerts and false positives, and also meet the compliance requirements. Lastly, automation to improve speed and accuracy is very important, and this further drives the operational efficiency of transaction monitoring and also reduces the manual intervention. And lastly, I think again, I would like to re-emphasize with the complex regulatory environment, it's very important for FIs to keep a check on their organization specific regulatory obligations. So with this, here I come to the end of the presentation. Thank you so much.